What up, Salvador Briggman here. Welcome back to the Crowdfunding Demystified YouTube channel. On the channel, we love to talk about crowdfunding. And specifically today, I want to talk about StartEngine and go through a simple tutorial for those out there that are interested in actually raising capital for your startup company. So if you want to raise capital for your startup company when it comes to being a founder, being an entrepreneur, or trying to grow your company, you're really trying to get it off the ground, this is going to be the episode for you. In addition, we're going to go through some of the pros, the cons, some of the things you should be aware of when it comes to this equity crowdfunding portal, this equity crowdfunding website. We're getting into that today and really trying to demystify it, make it much easier, break apart and really kind of tear apart what is this a very complicated process, in my opinion, make it easy, simple to understand, effective, and ideally useful and practical for you. And it's coming up right after this. Okay, man. Again, my name is Salvador Briggman. I have been in the crowdfunding industry since 2012 with my website, crowdcrux.com. In addition, I have the podcast, Crowdfunding Demystified, where I bring on real-world examples of people that are raising money every single week. In addition, I do coaching. I help people when it comes to launching campaigns, do a lot of different stuff. I have my online forums out there. I have books as well that I've written in the equity crowdfunding industry, as well as Kickstarter, Indiegogo, those kinds of campaigns. So a lot of stuff when it comes to crowdfunding. Today, let's really get into this and let's kind of break this down in a no-nonsense fashion. So first of all, I'm really gearing this towards people that are looking to raise money on StartEngine. I have a whole other tutorial out there when it comes to investing. So this is really for people that are trying to raise money. So the first thing when you come here is that what you'll notice is that there are multiple styles of campaigns on StartEngine. So for example, there are ones that are raising money under what's called regulation crowdfunding. Regulation crowdfunding being kind of what the Jobs Act pioneered. With regulation crowdfunding, you can raise money from non-accredited investors online, and they can also be worldwide. So if you want to raise upwards, at the time recording this video, $5 million using regulation crowdfunding in a 12-month period, you can do that from non-accredited investors, which is the first time in human history when that has been the case. So it is super exciting, brother. It is so exciting. In addition, they have regulation A+ raises. So with regulation A+, think about basically a lot more onerous legal compliance, but you can also raise a heck of a lot more when it comes to regulation A+. You can raise upwards of 75 million, and depending on the rule which you go under, you could have general solicitation as well, which is just a fancy word for being able to market your campaign, which again can be available as well to accredited and also non-accredited investors if you do it right when it comes to Reg A+. So there's a combination of raises here. Some are Reg CF, some are Reg A+. If you're a larger established company, you might be more interested in Reg A+. If you're a small player trying to raise $500K, $200K, $300K, $1 million, you might be more interested in Reg CF. Also got great companies as well, doing campaigns like 3.5, etc. when it comes to doing regulation crowdfunding. So the first takeaway is that you should be aware of, this ability to have different types of raises in terms of how much you can invest and that kind of stuff. I'll get into that a little bit more. But first of all, I kind of want to get more into a little bit of the how-to. Okay, so we're going to get a little bit into the how-to here. So first of all, the way that this starts is that these guys have been blowing up on the scene in the last couple of years, and that's really because of the growth of regulation crowdfunding, which I've been covering on this channel, and equity crowdfunding. And I continue to see it growing exponentially over time. So far, they've raised 600 million over 75,000 750 rounds, over 950,000 users on their platform. So that's definitely not peanuts here. So some of the things that they offer that I really like about this platform, first of all, they do offer a rolling close. For those of you that are not familiar, this is the ability to launch a campaign out there, to do a raise, and if you want to, at a certain point in time before the campaign duration is finished, a lot of campaigns are running 30, 60, and 90-day campaigns nowadays. You can actually withdraw the funds that you've raised that has been invested in your company. So this is really exciting. Doing a rolling close is something that's a really great function, in my opinion. In addition, they help with SEC filing when it comes to doing things like your Form C. They also obviously help when it comes to their network of investors that are helping to bring funding to your team. They obviously give you an account manager, that kind of stuff, and also some more analytics when it comes to your actual campaign and the information that is there, and basically, how to actually do this raise in a much more calculated way. So first of all, you're going to decide, do you want to do Reg CF or do you want to do Reg A+? Okay, that's really going to be the decision. When it comes to Reg CF, like I mentioned, upwards of $5 million, probably launch in about 6 weeks' time. I do think for those of you out there that are serious about this, you should actually be probably thinking more of in the 8-week timeline It does take some time to get paperwork together, to think about the marketing strategy, to get your pitch deck in order if you don't have one. So I would say probably 8 weeks is pretty realistic. 6 weeks is also realistic. Once you get down to 4 weeks, you probably already have a lot of your ducks in the row. You probably already thinking about raising capital for a while if you're kind of getting there in the much more aggressive timeline there. There's also more information when it comes to costs, which I want to go into in a second. But in terms of just Reg CF, first of all, they're going to give you the platform to be able to do that. StartEngine themselves as well has raised money from the crowd using their platform. They've raised $65 million at the time I'm recording this video. They're also currently doing a round on their own website in order to raise funds for their company. Reg A Plus, like I said, upwards of $75 million, tends to be a bigger round, larger businesses, and you can also raise with a registered broker-dealer. So StartEngine is a registered crowdfunding portal, which is different from being a registered broker-dealer. So you can look more into that nitty-gritty if you would like to, going into their website. So one of the first questions that I had in coming across this information was like, okay, this is great, but really for those out there, like what is it when it comes to the cost of raising capital? So when we're talking about the cost of raising capital, what goes into these raises, some of the pros and the cons, and also kind of cap this off with some information when it comes to investors. So first of all, how the heck does StartEngine make money? So this is, to me, one of the big differentiators between StartEngine and other portals that are out there, other platforms like WeFunder, like Republic, like Micro Ventures, like Seed Invest, okay, some of the other platforms that are out there. They have a much more diversified revenue stream base, I find. So some of them are from the fee which they charge in order to raise capital. Some are in terms of equity, others in terms of service fees. They offer services as well for people that are launching campaigns, trading fees, and other things when it comes to owner's bonus. So I'm not going to go into all of this, but in terms of equity, they take stake in a StartEngine alumni at the same terms as the investors on their platform. They also, when making money, when a company raises money, they charge companies a percentage of what they raise. There's also service fees, so charging fees for providing companies with a range of services to help them onboard and launch their campaign. This is also something that I help with. So if you're interested in talking about how to actually do an effective raise, whether you're interested in StartEngine, WeFunder, or another campaign platform, we can start that relationship with a one-on-one intensive coaching call where we go in depth through your entire campaign strategy, everything you need to do when it comes to getting started. Also talk about potentially if that's something that I can help you with. If you're interested in learning more about that, you can go to crowdcrux.com/coaching. You can check that out as a link in the description. But in addition, these guys also charge trading fees when it comes to their secondary market, StartEngine secondary, to investors. And finally, owner's bonus, which is a new thing that they're doing. An owner's bonus membership is their take on Amazon Prime. For an annual subscription, investors gain access to unique perks, including early launch notices, 10% bonus shares, and participating in offerings, and more. So they're doing a lot of stuff, and there's no knowing what's going to stick around or continue in the future. So in terms of percentages, I did an article a ways back, and it just shows you, it really dates me, right, how long I've been in this industry. Back when I wrote this article on CrowdCrux, they were taking 6% fee of capital raised for small OPOs, also known as regulation crowdfunding campaigns. Any entrepreneurs were paying this fee. So I do have a web site out there that I wrote this article kind of going into that. But what I noticed is that they actually have taken this information off of their website. So I was hunting around forever to try to find their pricing, and I could not find it on their website. So it doesn't seem like, at least from what I've seen, that it was publicly stated. So I had to do a little bit of snooping here and go more in depth. Okay, so first of all, I brought up their annual report when it comes to 2021. So some information you can see here from Edgar, looking at SEC. You can actually go and you can see some of the different ways in which they actually structure this, whether that's regulation crowdfunding offerings, regulation A offerings, Rule 506C offerings, these different things, StartEngine Secure, StartEngine Premium, StartEngine Promote, primary, secondary, so and also the bonus as well, some of the stuff that they have undergoing development. So there's a lot of information here. And there's a lot of information to comb through some of these wholly owned subsidiaries if you want to, that you can look into. I'm doing a little bit more research here. I came up with this one document. So when it comes to in regulation crowdfunding offerings, our crowdfunding portal subsidiary is permitted to charge commissions to companies that raise funds on their platform. They typically charge 6% to 10% under regulation crowdfunding offerings for platform fees. In addition, we charge additional fees to allow investors to use credit cards, which mainly is credit card processing. We also generate revenue from services which include consulting packages priced between $5,000 to $10,000 to help companies who raise capital with regulation crowdfunding, digital advertising services branded under a StartEngine Promote for an additional fee, as well as transfer agent services marketed as StartEngine Secure. We additionally charge a $1,000 fee for certain amendments we file on behalf of companies raising capital with regulation crowdfunding, as well as fees that require bad actor checks for companies utilizing their services. So you can look at more into this information, which is public, and you can actually see this. But I would say, from my own blog post, what they were quoting before was around 6%. Now it seems around 6% to 10% when it comes to regulation crowdfunding offerings. I think that honestly, I don't want to speculate too much when it comes to this. Here's another document that I pulled up when it comes to, the crowdfunding rule 302D. So this one, for example, the site charges issuers a fee constituting 5% commission based on the amount of investments when it comes to they raised in their offering. So there's a lot of different numbers that are thrown around here. I think the easiest thing would be if it was just publicly stated on their website and people could very easily see what is the fee that is being charged to entrepreneurs out there when it comes to this. Is it part equity? And being more clear about that. Obviously they say they're taking equity, they're raising the fee there. I found it very difficult to navigate that. So that would be one criticism that I have that I think they could improve upon, just being more transparent in that way, whether that's 6%, 10%, or, and they gave you obviously an idea of some of the ancillary fees and costs that go into that. So that being said, let's go a little bit more through here. Some of the things that you should be aware of in this tutorial when it comes to raising money on StartEngine. So first of all, I'm going to assume for the majority of you out there, you're probably doing a regulation crowdfunding raise. Regulation A+ is usually a bigger company, much more onerous compliance, much more information you're going to need to provide there, and a much costlier legal process. So first of all, when it comes to time to launch, they're kind of quoting there, a couple of weeks there, 4 to 6 weeks. In terms of cost to launch, this is something I found very interesting. So the costs are really going to be dependent on how much you are raising. So for example, if you're going to raise and have around 107,000, you mainly need to be incorporated as a corporation, and you all can then, if you are raising that amount, as a goal, you can actually self-certify the company's financials and save a financial review if you're only raising that much. For Regulation Plus, it's obviously much more. In order to do one of these raises, they're quoting around 50K to 100K, as well as longer to actually do one of these raises. In terms of how, going into launch, you are typically doing, like I said, around 60 to 90 days when it comes to being live with an equity crowdfunding campaign. So that will give you an idea of that. So one thing that is interesting when it comes to this is, StartEngine, it doesn't seem like creates an SPV in the same way that some other platforms like WeFunder does. So they say if you have a successful raise, your cap table may have thousands of new investors on it, but we don't believe that's a bad thing. StartEngine has over 35,000 investors on their cap table, and that has only assisted in their growth. So that's the way they choose to actually structure their raise according to their website. Like I mentioned, you could do a rolling close. So in order to collect capital on StartEngine as it comes in, you got to raise at least 120% of your minimum funding goal. Once you've raised $12,000 or of a $10,000 minimum funding goal, the SEC mandated 3-week cooling period has expired. You can disperse those funds raised as your campaign continues to accept new investments. In common parlance, that is basically what's called a rolling close. Okay, if you raise less than your funding goal, and you obviously have to have a minimum, then so we require that companies will set a minimum funding goal of $10,000 for their campaign. This way, if you raise less than your minimum, your maximum funding goal, you can still collect the investments you raise as long as your campaign has raised more than $10,000. So they're trying to really just slant it in your favor, I guess I would say. When that typically, if you didn't, then you'd also have those funds be refunded to those investors.
Want to take all the stress out of fulfilling your Kickstarter rewards? Fulfillrite is the turnkey solution that puts product delivery on autopilot. The Top Campaigns uses trusted high-tech provider to store, package, and ship their products. Focus on growing your business. Leave shipping to the experts. Don't wait. Get a custom quote from Fulfillrite today. Link in the description.
So before I get into some of more of these things when it comes to investors, I do want to just point out as well some of the things that you're going to need when it comes to launching. I'll give you a quick example of this also. So basically what you need to launch is you need a pitch deck, you need your story, you need a video, you need to set what your terms are. So if you're doing a price round, your valuation, the type of security that you're going to be offering, some legal things when it comes to like articles of incorporation, filing your Form C, that kind of stuff. You might also be working with one of their CPAs if that's something where you're doing a much bigger raise or one of your own in order to help you do more compliance. And you're basically then going to be setting the terms of your offering when it comes to that. So I would say those are a quick example of kind of how this would look. So this is more for an educational perspective. I am not being paid in any way to actually promote this. And this is really, I'm not trying to give you any details when it comes to this offering. I'm just giving you an educational example here. So I'm going to scroll through this really quickly. So this is basically, you'd have a video. First of all, when it comes to your campaign, you'd have a name of some kind. You'd have the terms of your round. Now, as you go down to the right, you might also have certain perks, for example, that you would get for investing at a certain amount. You go down, you would have a really great campaign page, probably some graphs. This would be very similar to what a pitch deck might look like. Some information when it comes to how this company is growing, different disclaimers, that kind of stuff, some of the more recent updates, etc., and also some comments that are actually being people who are commenting and are participating in that round. So basically the people that are investing, right? So that'd be the basic structure when it comes to an overall campaign. I would say the main things you need is a really killer campaign page, obviously a great video, those perks, the terms, all that kind of stuff. And in addition, have a really amazing marketing strategy to be able to trigger the algorithm when it comes to StartEngine or any other equity crowdfunding platform that is out there. Okay, so the last part I want to go in when it comes to this tutorial is really more about the secondary market. And I do think this is important because if you are going to be offering equity in exchange for cash, you're going to be doing a raise on any platform that's out there when it comes to equity crowdfunding. Your investors might be interested in having an liquidity event in the future. So doing obviously IPO or getting your company sold. How the heck are they going to cash out? How are they going to transform this typically illiquid investment into something that's more liquid? Well, StartEngine has an answer for this. This is basically StartEngine Secondary. So this is an investor trading platform. This is basically where you can actually trade existing shares which you have that are originally purchased through Regulation A+, Regulation Crowdfunding, or Regulation D after the company is successfully quoted on secondary. So this is, in my opinion, super revolutionary. This is, I haven't noticed another company that's done it as aggressively or as quickly as StartEngine. And you could correct me if I'm wrong. I've been watching the space for a while and I just haven't seen it. So I think that StartEngine Secondary is an incredible leap forward. And I think this is awesome what they're doing in terms of allowing investors to basically have a peer-to-peer marketplace where they can trade their different shares. So this is super exciting. So this is for U.S. residents that are 18 or over that are operating those investment accounts, first of all, when it comes to being able to actually trade on StartEngine Secondary. Okay, so one important thing I want to point out is actually the difference between Regulation Crowdfunding and Regulation A+. And I know this is a lot of dense information, so I really do appreciate you obviously sticking around to this point in the video. And if you have, please give me a thumbs up. And if you like this, but Regulation Crowdfunding, one of the big things, at least at this point in time, is that you really can't trade or cash out when it comes to these securities for 1 year. So you need to have one full calendar year from the time of the initial investment before you can begin to actually resell these securities which you have purchased. Now, up until this point in time, again, there hasn't been an easy way to do this. Now, StartEngine has this thing called StartEngine Secondary, which allows you to do it. However, you have to wait for a year before you actually then would participate in your company's StartEngine secondary listing. So once that's happened, you can see here, they can allow investors to offer to buy or sell securities on StartEngine Secondary 1 year after their initial offering, provided such companies are accepted by StartEngine Secondary. So as long as it's been a year that's been passed, you can then basically participate in this, and this is a great liquidity event in my opinion, which I think is really cool. So some of the things that I think that are a little bit more important here is that in terms of trading hours, that's going to be really based on the actual stock that's trading there. It's going to have individual market hours, and then it's going to be operating very similar to a lot of these other trading sites that are out there. When it comes to execution and when it comes to people who can participate in those kinds of things. So I'll let you look at this more in your own time, but I would say that this is something that for you, if you want to give your investors more liquidity in the future, and obviously this is a very illiquid investment in whether that is Regulation Crowdfunding or Regulation A+, this could be a big pro, in my opinion, in the future if this really does take off, because then it allows you to have that after a year period and people can trade their securities. In terms of one quick thing I want to point out before we finish this video off with the pros and the cons is that there will be as well a fee that comes on top of that. So at the time I'm recording this, it's going to be charged to investors on top of the price of the shares. So this amount charged will be clearly stated on the investment form at 3.5% processing fee. So that's going to be 3.5% when it comes to that. And you can also look more into this information on their FAQ, and you can go through all of this beautiful, wonderful information, right, when it comes to investing if you are interested in that. Okay, so there's so much more we could cover, but I really just want to go through kind of like a high level pros and cons, and we'll end the video on this note. Again, if you'd like to talk about this, or you'd like to talk about an equity crowdfunding campaign raise, or you'd like to talk more about raising capital for your business, whether that's with equity crowdfunding, whether that's with Kickstarter, Indiegogo, whether that's another form of crowdfunding, make sure to book a one-on-one individual coaching call with me at the link down below at crowdcrux.com/coaching, and we can really get that squared away ASAP, introduce you to tools and resources you never even knew were there. Sometimes you just don't know what you don't know, and I really try to help in that industry with that. So lastly, what are some of the pros and the cons? So in terms of pros of StartEngine, aside from WeFunder, at the time I'm recording this video, it is one of the other largest equity crowdfunding portals or websites that are out there that are doing regulation crowdfunding raises. So it's definitely one of the big players in the industry. So you are going to have a much bigger platform, a much bigger base of investors than some of the other sites that are out there. I'd say another pro is that there is a growing reservoir of functionality when it comes to StartEngine. I do like the way that their campaign, look and feel is improving over time. At the time I'm recording this video, the ones that stand out in my mind are Republic, WeFunder, and StartEngine when it comes to the look and the feel and the design of that, actually. And I think they have really good UI. The other thing is, again, more initiatives. They've recently partnered with Indiegogo, so we're going to be seeing more Indiegogo campaigns that are porting over to StartEngine likely in the future. In addition, they recently partnered with Indiegogo, which is a rewards-based crowdfunding website that allows you to get backers and to raise funding online for an e-commerce business or another style of business, hardware, etc. And I think we're going to see more StartEngine campaigns launched as a result of that partnership, more investors as well brought into the community. In addition, they have StartEngine Secondary, which again is a great liquidity event when it comes to that. And I think that they're also doing really interesting things in terms of their bonus shares program, and as well some of the different services and things that they're providing. They're clearly growing a ton as a company every single year. So I do think that this company basically has the tailwinds at their back, and they are doing well and they're growing a lot. And whether or not some of these initiatives that they're starting going to stay around, I do think that a lot of them are very important, and it's clear that they're investing back into their core business. Now, in terms of some of the downsides out there, I would say the biggest downside is you're much more closed off, I would say, in doing a StartEngine campaign. I wish they would be much more transparent with their pricing. They really are trying to build much more of a private ecosystem. It sort of feels like, and it just kind of in my own looking, I wish they'd be more transparent about what it actually costs when it comes to for entrepreneurs to raise capital. I just found that difficult to find on their website, and maybe I was just looking in the wrong place. But if so, they could definitely correct that, and they could let me know. Another con I would say with StartEngine is it sounds like they're really trying to sell their services as well. So what happens if their services are not necessarily the best ones for your company or for your campaign? What about working with independent platform or independent companies that are out there in the way that some other platforms will? I think there's something to be said for that, and having a very big list of vendors, right, that you can work with as a founder or as a creator in that way. On the piggyback of the last point, I would say the other thing would be potentially higher fees, right, than other platforms when it comes to that. But again, we just need more information from the actual website. And the last con I would say with doing a StartEngine campaign is that you really are, playing a lot into this ecosystem, and that could go favorably or that could go not so favorably. So it really depends on what your choices are in terms of the type of funding you want to do, whether or not you want to have these different types of liquidity events, to be participating in these different programs that they're now offering there. If you do want to, take advantage of that or not, the type of investment contract that you want to do. I think that along with WeFunder and with Republic.co, they're one of the growing equity crowdfunding sites out there. I'm really excited to see their growth, and I'm really looking forward to seeing more great things from this platform, and as well getting more transparency behind the doors of the operations, etc. So overall, this is something that I would definitely put on my radar. And if I'm doing a coaching call, would bring up this site. Again, it'd be really dependent on the individual, what their goals are, and what type of project that they want to do when it comes to that. I hope that you enjoyed today's tutorial style video, and I did try to cover a lot, so I hope that it was a little bit condensed for you. At least it was a little bit fun as well in the way that I presented it, and hopefully it kind of broke down a little bit more of a complex topic for you. If you did find it to be useful and you did find it to be educational, please give me a thumbs up so that other people know. Leave a comment down below. Let me know what kind of campaign you are trying to run, what kind of company you have. And in addition, I got a free course out there that goes through how to launch an equity crowdfunding campaign. You can go to this link I'm about to mention at crowdcrux.com/equity course. I will link that up down below as well. I also got a great book out there on Audible, and you can actually get a free copy of the book if you pick up a free 30-day trial of Audible, which I will also link up down below at crowdcrux.com/equity audio. That being said, thank you so much, man, for supporting the channel in my mission to demystify crowdfunding, to bring great education your way. I hope you enjoy it. Again, my name is Sal, and I will see you next time.